president and founder of the Mortgage Calculator. We are a lender that specializes in all kinds of different loans, and specifically non-QM or alternative documentation loans. So I'd like to thank everybody for joining us today to go over the state of the rates this morning, as all of our banks and partners have just released their rates for today. I have my co-host Kyle Hiersche, our partner, as well as Jose Gonzalez, our sales manager, who'll go over a little bit more info here in a second. So to get started, let me go ahead and share my screen and we can go over some scenarios for the rates today. So here we have a pricer that I've built for our team. This is just to give us an example of the rates today. We'll go ahead and pull up a average scenario of a $400,000 loan amount. We'll go at 80 LTV purchase. That's typically most common. 20% down, 80% loan to value. We can put our desired price. We can say 99, meaning we'll desire to buy it down a little bit. That'll show you some examples for some average rates that are a little bit lower. And we're going to do a conforming loan purchase, 30-year fixed, typical loan scenario for a primary single family. And for all of our demos today, we will go ahead and use Miami-Dade County in Florida, which is where our office is based, as an example. We also will use 760 FICO and an example of a 40% DTI ratio in order to get some rates here. So we'll continue to use these basic setups for our scenarios so that we can compare all of our different programs. So let me go ahead and click show rates here just to show our partners conventional rates this morning. So if everybody knows, obviously rates have been very volatile. So these are probably higher than most people are used to. And this is our Fannie Mae Home Ready program, which is a little bit different for some qualifications, area median income qualification, etc. But these are options. Let's go down to our standard 30-year fix without the special options included. And looks like right here is the first option from one of our bank partners. That's just a regular Fannie Mae. And it looks like our rate this morning is about a 6.5% rate for about a 1 point in buy down there. That's a great option for us. We have our little APR designator there as well, which is important to compare across the different programs. So this is a great option for someone that qualifies for conventional financing, which is typically a maximum of a 49 DTI. Now, if you do exceed that, or for some other reasons need to qualify for an FHA program, those do have a little bit more lenient guidelines. So we'll scroll over here and set up the same scenario on 80 LTV, primary purchase. And again, for example, we'll use a 1 point buy down. And this time we will do FHA rates. So we'll have a purchase, 30-year fixed. Everything else will stay exactly the same for this scenario. And let's see what our partners and banks have for FHA today. So as you can see here, FHA obviously has a lower rate, but you need to pay attention to the APR because FHA does have some fees, including an upfront mortgage insurance premium and a monthly mortgage insurance premium. So there is a little bit of difference there, but it does look attractive at first. And this is a 5.75 rate with 0.875 in buy down cost in this scenario. See, we have a plethora of other partners and banks with these programs that vary in rates right around the same. So a couple of our partners offering great options in just below the sixes, but make sure to key in on the APR because there are some additional costs there. Some other programs that are very popular, which we won't go into today in the example. We obviously offer VA programs for those of you out there who may qualify for your service and qualify for a Veterans Association loan. That would be this. And for USDA properties where the property actually has to qualify for USDA, as in it has to be in a rural area. So those are a little less common, but we love to work with those people who qualify for those scenarios. But the one that we're very excited about here and the options that allow us to work with borrowers way beyond the scope of FHA and conventional, as well as VA and USDA, are our expanded guidelines, aka non-QM programs. So these are what get us excited and what our team really specializes in. So let's just show some of those examples here. So we'll do the same thing here, a $400,000 loan, 80 LTV. Everything's going to be the same. We'll do a 1 point buy down, and we're going to choose expanded guidelines. So these are for our non-QM programs that actually use alternative documentation. Everything else will stay the same in this example. And for our alternative documentation, typically our most common option is a bank statement option, which is right here, personal bank statement for 12 months. And in order to use this option, we do have to work with a self-employed borrower. So these are people in the new gig economy, Uber drivers, things like that, people that are realtors. A lot of our realtor partners qualify using bank statements. Is a great option for realtors or other people in the self-employed space. So as long as we check that, we will be able to see our non-QM options for borrowers who may not qualify for conventional or FHA. So this is what really gets us excited in order to expand and offer borrowers who may be underserved great options as well. These options do vary greatly, right? So we have a plethora of options here. You'll see me scroll down. There's probably 30 or 40 programs at least. Make sure you get with one of our licensed loan officers that can navigate all these different programs. Every bank and every outlet is different, so we need to make sure we fit in that program. But generally, we have some programs here for a bank statement loan from 7.99 with a pretty crazy discount points. So this is probably a much better deal overall for this version with an 8.125 rate with a relatively lower discount points. And then we have a closer to our requested 1 point of buy down with an 8.25 rate. So this would probably be what I would quote my customer here, which is kind of the best bang for the buck. Obviously, just to go down in 0.125 in rate costs quite a bit here between these two bank outlets that we have. So I would definitely choose this one over the other options. But again, these are just an example of the programs we have and the rates this morning. Get with our licensed loan officers in order to navigate which one works best for your situation. Now, let's go through some options for investors. So we love to work with investors here at the Mortgage Calculator. There's probably most of our loans are for investment properties, people that are obviously refinancing or purchasing investment properties. We also do have a lot of short-term rental requests for people that are looking to do Airbnb, VRBO type rental properties. So I'll have Jose talk about that in a minute, about how exactly that works. But let's go through a couple examples here of what a person would look for on an investment purchase. Let's again use the 99 pricing option, so 1 point of buy down, just to look at a little bit better rates. And we can compare conforming. So if you qualify for conventional, you have W-2, full doc income, that is excellent. You could purchase an investment property with 20% down for a single family in Florida. These are great options for our borrowers that do qualify for conforming. So let's go ahead and check out the rates now for Fannie Mae and Freddie Mac conforming. So for an investment property, obviously there's a lot more cost involved even on a conforming loan. So remember, this is not us that are charging this. These are the government-sponsored entities, Fannie Mae and Freddie Mac. They do have extra costs involved for rental properties, investment properties. So you see here, some of our banks and outlets are offering 6.99, but with a very high cost. So I'd probably scroll down here to look for a more reasonable discount points. Looks like this is probably one that would be more reasonable. And obviously, there's more at higher rates as well, which would be more reasonable cost. Just get with one of our loan officers that can navigate all the different options and go through the whole rate stack for you and find the best bang for the buck for you if you do qualify for conforming. But now, most of our investors now are not choosing to the conforming route because there are alternative options. And of course, once, for those of you who may know out there, the loan officers watch it, once you get 10 Fannie Mae sponsored loans, you are not allowed to get any more. So a lot of our investors have 10, 20, 30, 100 rental properties. So they're obviously going to have to use alternative loan programs for that. And that's where we come in. So let's go ahead and show our alternative programs. So for an investment property, we have expanded guidelines for those as well. And these are our most popular options by far. So everything else staying the same: purchase of an investment property, 1 unit, Florida. And we're going to use, let's say, bank statements again. So if we wanted to use a borrower who still wanted to use their income, but use bank statements to qualify because they may be self-employed. Typically, we have a lot of realtors and other people that are self-employed that don't want to use their regular W-2 income, or maybe don't have the regular W-2 income. They're going to use their bank statements. We'll also do a prepayment penalty of 3 years here for our non-QM investment properties. We typically always include a prepayment penalty in order to get better rate options. So let's go ahead and check out our options here today for a bank statement loan for a investment property. So here's one of our partners offering a great option at 8.99 rate for 0.25 in discount points. You see here is a relatively par rate here for alternative documentation around 9. So we have a plethora of options that vary for that exact scenario. Now, what is our even more popular product, and what Jose will talk about here in depth in a second, is what is called our DSCR option. So for those investors out there who want to purchase an investment property, use our expanded program. Excuse me. And use a no income option. So DSCR is an option that uses no personal income, only uses the income from the property. So no employment, no income documentation needed at all. We're still going to do a 3-year prepayment, typically for all of our DSCR loans. And these are still 30-year fixed loans that are great options, which allow our borrowers to go beyond their 10 Fannie Mae or conventional loans and also get into rental properties, and particular short-term rental properties with no income documentation whatsoever. So we will go ahead and check out these options now. So you see here, very comparable to the bank statement options. We still have rates right around 9.25 for relatively no cost. So these are more popular for our investors that can basically get the same rate and cost for the same loan without having to provide any income documentation. So super popular. We can also use these for short-term rental properties. And you see there's dozens of options here that we have that vary. So again, get with one of our loan officers that can navigate you through this program. Some of these higher end, higher rate and cost options, maybe particularly for short-term rentals where they have more lenient guidelines when it comes to documenting short-term rental income, which allow us to get into different properties. A lot of these programs also allow non-mortgable condos and things like that. So if you look at all these different options we have, they are for various different scenarios. So please get with one of our loan officers that can find the exact right program for your scenario. So that's basically it for today's rates. We just want to go over a couple different options, our more popular options, just show everybody what's going on out there. But now I have Jose here who can actually pull up an example. Let me go ahead and switch my screen out here. And I'm going to have Jose talk for a second, a little bit about an example of how we can use these DSCR programs I just explained for a short-term rental property. So Jose, you want to get your screen ready to share?
Sir.
Switch over to the other one there, and
Ready.
boom. Okay, cool. Go ahead and take over, buddy.
All right. So, as you were mentioning, we have the great DSCR which stands for debt service coverage ratio, which is an actual calculation derived by dividing housing expense by rental income. Excuse me, rental income by housing expense, and you want to make sure, in the best case scenario, that the ratio is at least 1.0 or greater, even though we do have options with less than 1.0 DSCR. So the property is not cash flowing, we'll still do it. But those are limited to 75% loan to value for what they call the DSCR no ratio options. So here you see with 20% down on a $400,000 loan, $500,000 purchase price, we get some very good options. You can buy it down to as low as 7.875 with the highest cost, with the lowest cost being 8.875 with a cost of $2,000, which is half a point in loan discount buy down fees. So this option is, again, where no personal income nor employment verification from the borrower is needed, as the property is qualified on the cash flow that is generated by the property. So that's how the borrower is qualified. And so you can see how these options really kick ass. I'm going to go to 75% loan to value, and you can see that then the low rate drops to 7.25, which is blowing doors on conventional when you can, at the few times that you can get the conventional option in play now due to compliance issues that you're going to have with those conventional loans. I'm pretty sure that if you put it side by side at a 75% loan to value, let's say on a 2 to 4 unit property, which is a play that many of the investors love, those multi-units properties, conforming is not going to be able to touch this rate right here, 7.25. So this is roughly 3.5 3.25, somewhere around there, 3 1/8 points in buy down to get 7 1/4, but you can still get 8 1/4 with no additional buy down on a DSCR. So that is an amazing option. Wanted to touch a little bit on the rates today. If I can share a minute, the 10-year ticker, everybody will see what's been happening since last Thursday. Last week, the Bank of Japan did announce a little bit of change on the cap that they allow on their financial positioning, which raised it a little bit. And then now China is opening up. They are releasing the restrictions on their COVID policies. So you see that the 10-year has inched up to 3.822. But on the positive note, that really has not affected the rates on the DSCR, which is really experiencing good liquidity in the market. So we're still seeing very good options, as you can see here on the DSCR at a 75 and at an 80% LTV.
Beautiful. Let's go ahead and drop that then. So yeah, if you guys would like to go over some of these options as Jose explained, the quick pricer that we built just to show kind of the basic scenarios doesn't go through all the options. So as Jose explained there, we have a whole bunch of different rates and cost options that we can show any of our clients. So please get with one of our licensed loan officers. We are licensed in 15 states. And for the DSCR, commercial-based business purpose loans, we can do those in almost all 50 states for our investors as well. And we have over 340 loan officers in pretty much every state that can work with you and find which best fits your scenario. So with that, we'll go ahead and sign off today. So thank you guys all for tuning in. Please go to themortgagecalculator.com. You can go ahead and request instant rates right there, especially on our DSCR programs, and go ahead and connect with one of our LOs to go through the different options for you. So thanks everybody for tuning in. Thanks, Jose, for going through the presentation today. That was very helpful.